Hello everyone. This is the pre-market report video for today, 12th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. We know yesterday there were a lot released in the aftermarket. So quickly let's discuss about the US inflation and then we can discuss about both TCS and Infosys Q3 results in detail and its probable impact. First, US consumer inflation for December month. As usual, every day US market opened at 9:30 am Eastern time and the consumer inflation data released at morning 8:30 am itself. So before their market opening, US investors got enough time to understand it. So then at 9:30 am, S&P 500 opened gap up but still dropped near 1% and recovered all those. Hence, in one sentence, 60 to 80% it's a non-directional data but leaning towards the negative side. I will tell why. If required, please pause and have a look. The top two is core consumer inflation number, which means just without food and fuel, whereas on the bottom, it's overall inflation for December month. We know, unlike India, always for Fed's US interest rate decision, core inflation is more important than the overall one, since the volatility on food and fuel is predominantly uncontrollable. So Fed don't want to include those additional volatility in their decision making. To be honest, they use PC inflation as that measures the consumption, whereas this measures the consumer bidding price. But still, historically, investors and every government other than US uses consumer inflation for their interest rate decision, so these two carry weightage. Anyway, now coming to the data, on month-on-month basis, core inflation increased 0.3% and it is same as analyst expectation and also same as November month. However, on year-on-year basis, on the positive side, it came as 3.9%, which is lower than November month 4%, but higher than analyst expectation. Hence, this somewhat positive reduction in core consumer inflation compared to November month was the reason for the S&P 500 gap up opening and the recovery in the second half. Now, coming to the first half negative push down, on year-on-year basis, overall consumer inflation increased to 3.4%. It's 0.3% higher compared to November month and 0.2% higher than analyst expectation. And similar trend in month-on-month basis as well. So, this overall consumer inflation increase for the December month is the reason for the negativity. But somewhere in the afternoon, Bank of America released a statement that they still think that Fed will start reducing the interest rate from March itself because of core inflation reduction. This also to some extent supported the market. So as a whole, last night market took it as neutral. But honestly, this data is slightly negative. Market wanted to be positive, so it found the reason and also with the help of short covering, it recovered all the morning loss. Now, the next PC inflation is scheduled to release on January 26th and Fed interest rate decision is on 31st January. Till that date, on the short-term basis, we can expect either consolidation or market to be negative with a confused state. So that's the takeaway from this inflation number. In the end, last night, Dow Jones increased marginally 0.04% and S&P 500 down marginally by 0.07% and Nasdaq closed on absolute value same as day before yesterday. In case of VIX, it decreased to 2% and moved below 12.5. That's the US inflation story. Now let's look at the TCS and Infosys results. Yesterday in the preview, we discussed this. For TCS, as per the average of 6 brokerage estimates, sequentially, the revenue expectation is to increase 1.2%, whereas the earnings came as 1.5% increase. Similarly, on the yearly basis, the expectation is to increase 3.7% and the actual value came as up 4%. So, revenue-wise, it beats the analyst expectation. However, from the profit-wise, quarter-on-quarter basis, it contracted by 2.5%, whereas the analyst expectation was expansion of 2.4%. Similarly, analysts expected 7% increase in yearly basis, whereas it increased just to 2%. Hence, net profit wise, it missed the estimation. Regarding the Indian market impact, most probably it's negative. But generally, it's not just about earnings. On the positive side, one, the attrition rate dropped to just 13.3%. Second, board approved the interim dividend of 27 rupees per share. Third, the growth mainly comes within India. Domestic business increased 27% and EBIT margin wise also it beats the analyst estimation, came as 25%, whereas analysts expected around 24.5%. That's the TCS story. Now let's move to the Infosys. Revenue wise, sequentially it haven't increased, but on yearly basis it increased 1.3%. In both the cases it is better than expectation. Then on the profit wise, different analysts and different people will tell different perspective, but according to me, at the end of the day, how much money belongs to the shareholders after the tax from that particular quarter is important. So based on that, sequentially Infosys increased 6.7%, whereas yearly wise it decreased more around 9%. And also attrition rate declined further to 12.9%. This positive results in comparison to analyst was evident in Infosys ADR as it increased near 4%, whereas all other three stocks in line with the US market closed around flat. In case of GIFT Nifty, early morning it closed at 21,715. Now, to calculate the recent premium, we need to compare the yesterday 3:30 PM GIFT Nifty closing period value with the spot market value. We know yesterday's spot market closed at 21,647 and the same time Nifty closed at 21,688. Hence, here the difference is 41 points. If the market momentum is positive and US market close to positive means, then we can consider the premium of 40 to 60 points. If the market is negative and also we got 15 more days to expiry, then we can consider the premium 30 to 40 points. Again, it's just the approximation. So for today, I'm considering the premium of 40 points. Thus, based on early morning closing, it's indicating the marginal gap up opening of 30 to 50 points. Moving on about institution, FIA was net sellers for last 3 consecutive sessions. Now their January whole month net value becomes negative, and yesterday the net sold for 865 crore rupees, whereas DIA net bought for little above 1610 crore rupees. As a summary, US inflation data was not good. Market want to believe it's a good data, so not sure how long it can pretend. Infosys results good compared to analyst expectation, but it was also not good data from general point of view, and for now GIFT Nifty indicating the gap up opening of 30 to 40 points. However, TCS results was not good, and also FIA started their selling spree, which tells us that we need to be little cautious. Then, as per stock open interest, Polycab India, BHEL, Tata Communications, Petronet, SBI, SBI Card, HDFC Life and GMR Airports Infra got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Delta Corp, HDFC AMC, Gujarat Gas, Torrent Pharma, BPCL and Mahanagar Gas got an increase in open interest with a positive price close, indicating the long build-up. Regarding the things to look out, on the earnings side, HCL Tech, Wipro, HDFC Life Insurance, Tata Metallics, Anand Rathi Wealth, Aditya Birla Money and Just Dial are the some major companies' earnings scheduled release today. Then about macro, early morning before our market opening, Chinese inflation and trade data is due. Then during our market hours at 12:30 PM, UK GDP data and UK's industrial production growth is scheduled to release. In the aftermarket hours, India's December month consumer inflation data is due, which analysts expect to increase 5.87%. Near 6%, which is also not good. Another reason to be cautious. In addition, India's industrial production and manufacturing output and banks bi-weekly loan and deposit growth data, all important India-related macro are scheduled to release. Then finally for US, their wholesale inflation, WPI data for December month are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty opened 70 points gap up and hit a day's high 21,727. However, throughout, mildly it keeps on eroding and there was a sudden dip which drags Nifty to below 21,600 but immediately rebounded and closed with marginal positive. Thus, on the daily chart, it formed a bearish spinning top candle, hence it's indicating indecisiveness, but also it formed the higher high and higher low formation. Second, it continued the uptrend for 2 days in a row. Third, Nifty faced the selling pressure around 21,700 range, but with stability, it held above its 10-day moving average and concluded the session with a positive close. So, we can say technically it leaning towards positive side. However, as explained yesterday, to continue the uptrend, it has to close above 21,750 breakout level. Till that time, we can expect the range-bound consolidation to continue. Once it closes above, then the next resistance is record high 21,834. On the downside, 21,550 to 21,520 is the crucial support zone. In case of Bank Nifty, it also showed similar kind of price movement. Thus, on the daily chart, it formed a bearish candlestick pattern with upper and lower shadows, which somewhat resembles high wave kind of candlestick pattern, indicating indecisiveness among buyers and sellers. On the upside, 48,000 is the breakout point. A decisive breakthrough above will trigger the sharp short covering rally. On the downside, lower end support is very much intact, 46,900. Again, close below this level will intensify selling pressure in the market. Regarding weekly options front, the maximum call option open interest was at 21,700 strike, followed by 22,000 and 21,900, with new call option rating at 21,700 strike, then 22,100 and 21,600. Thus, the options data clearly indicating 21,700 is the immediate hurdle. Whereas on the put front, the maximum open interest was at 21,600 strike, followed by 21,500 and 21,000, with new put option rating at 21,600 strike, then 21,300. Hence, the immediate support may be at 21,600. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.